Boy, oh boy, you do not get to see this very often. This is something special right now. With the recent tech sell-off, it has opened up so many opportunities everywhere you look throughout the market that I've looked through my own watch list for entry points, and I found a company that I'd already been looking at for a new entry point, and that company just so happens to be NIO.
Back on deck on my fly shit. Really on my shit. Pay some respect to my mindset. Head blowing smoke, catch a contact.
All right, well, welcome back, everybody, and I assume, you know, if you're a regular viewer, you're probably wondering this is kind of a weird setup for a Sean video, but I am in the middle of switching up my room, switching up the way I film these videos, and switching up, you know, kind of the whole set and scene. So I was not quite ready to film it yet. I found there were some bugs while trying to set it up for filming. However, I did have a script ready to go. I had a video ready to go, and you know, this stuff is pretty this topic is pretty time sensitive, so I figured I'd try to film it one way or another and get it out there for you guys to you know, hear my side of things and possibly get some valuable information out of this. So if you guys do like it, and you kind of like this a little bit more, maybe I'll end up doing this more as like maybe a second video per week. Who knows? But if you do like it, don't forget to you know, leave a thumbs up and subscribe to the channel, as that is always very much appreciated. So I could do the welcome back everyone, or if you're new here, whole thing, but you know what, I think I'm just gonna import one from a different video, so you should see that right about now. Welcome back, everybody, or if you're new here, my name is Sean Lucas, and over the past year or so I've been looking at companies or stocks to review, research, and to come up with a compelling argument on whether that stock is a buy in my eyes at that given time based on its value. And welcome back, guys. In this company right now, I feel like it could have some value based on where it's sitting at right now. So without further ado, let's get right into it. So picking up where I left off from the last video, I stated this. So to kind of wrap it up here and to give it a nice ending point, this video was just an update of what happened during NIO Day and what happened with the stock price since that video. However, I wouldn't see, you know, this next upcoming week, I think it's gonna trade horizontal for a bit. And for a long time after that video went live, I was right. But recently, then there's been some sort of tech sell-off. Basically, from my last video on NIO, it was an update of what had been announced on the actual NIO Day. And with all the big news of NIO, the stock actually shot up the day before NIO Day even happened. And afterwards, it had been trading horizontally for some time, just like I imagined. And this has led us to where we are right now with the recent tech sell-off. So with the stock price of NIO doing exactly what I thought it was going to do, now we are at a very important part of the company's stock price. The price has fallen back into the consolidation wedge pattern that I drew up in the last videos to help us show where it could end up going somewhere. However, this time it is not moving with the pattern and is not moving as the pattern. It has just fallen back into the lines that we had drawn, somewhat finding a support back at the $41 mark, which makes sense because that's where a lot of people had started positions where the pattern was first initiated. So let's take a look at that right here, and you can see a lot of that. But the reason I wanted to make a video on NIO again is because of where they are at in regards to price, volume, and their shelves. Combine that with the earnings that are coming up on the 1st of March, which is Monday, I believe. Not entirely sure when you'll see this, but I'm hoping it's going to be before the earnings report because it looks like they're going to be reporting at 7 p.m. Central Time. So let's do just that. Let's take a look at the volume shelves. Because of the consolidation that had taken place in the $40 to $66 range, it has started forming a nice volume shelf over here on the left side. It is starting to become pretty skinny, which means it's coming further out into the actual chart, which overall means that, you know, that support, that volume shelf is becoming very strong. Basically, the skinnier it gets and the further it comes out on the actual chart helps prove that it is a support and you know, proves how strong it could be. Of course, this is nothing in comparison to the 2-year 1-day chart. Price control of $4.31, just a cool 90% difference. But with this tech sell-off and NIO and Tesla being the front runners of companies listed that were most affected, this brings up some concerns, right? And I drew this line right here, this long one, starting from the price control, starting from the volume shelf and going all the way through the consolidation and where we are at right now. I wanted to touch on a few things because of it, right? So let's zoom in a little bit. We can see that in the past week we had touched this big support, right? Obviously, we can see from this consolidation pattern right here that they had a different type of support, or they were going to have a different type of support with higher lows and lower highs, which is kind of what I'm looking for in this pattern. This support right here is something that we had touched and it is actually a big portion of the actual price, the volume shelf. I put the line here, and it looks to be pretty, self-explanatory, but support starts here because it's the last really strong part in that volume shelf. So yes, the stock's price touched the support, and we can kind of confirm this by the lines that we drew up in the past videos and the videos showing that the price doesn't want to go lower than $42 per share. But when we zoom in and we can see that it touched it this past week, then kind of recovered for a day or two. But the last 2 days, which was Thursday and Friday, they were both selling days, which this brings up a lot of concerns. So in other words, the reason that I wanted to make another video on NIO is because that I'm now concerned on the stock's price in the short term. Currently, it's sitting at the top, and when I mean top, I mean it's trading and staying in relative to its all-time high prices. And so, it's bound to have some growing pains. And of course, with growing pains, you're going to move up and move down to, combat that. However, it doesn't seem to be having nearly as many bullish days or buying days or green days rather than having bearish days and red days instead. This is why I am looking at it with a more concerned and more careful eye. Now, every time I voice my concern with this company, it's always directed to the company's stock price and not the company as a whole. I've said this in almost every NIO video I've made, which I think this would be the 4th video by now, that I've said I'm very bullish on this company in the long term. And I think that they have a real shot at competing with Tesla whenever they make it to the US. But if investors see some bad earnings that are coming up, on Monday after market, it doesn't even have to be bad earnings. If it's just large enough, if it's just a large enough number where the investors don't like it or don't think NIO hit the mark, it could be the bad news catalyst, which is huge right now, right? Because I always look at the volume shelves, and we have covered them a little bit already in this video. But if investors don't like the earnings, or the earnings don't come back or come back bad for some reason or another, and the stock breaks the strongest support since the price control of the 2-year 1-day chart, we could see the stock's price shot down to $28 per share, or even worse, $19 per share, as those are the next, notable volume shelves. Not even sure if you can call them volume shelves. It's more like a volume ledge, because they're smaller and probably they can't hold as much selling. Because between those prices that I had listed, this big range right here, the 40 to 66 range that we've been trading in for the past few months to half a year, and the 28, so this would be the $28 range. That would be the next point where I'd see it would maybe slow down, or the $19 range going down to here. And then obviously you got this one, and then you got this one. Now, the reason why I brought those price ranges as notable price ranges where we could end up sticking at is because if it breaks the support right here, there's nothing really here to help save it. These are called volume pockets, or I kind of like to call them no man's land. Now, these no man's lands, the price moves very quick if it falls into these no man's land. So if the earnings come back negative, or investors see it in a negative light, then it will fall very, very fast in here, because there's nobody or not a lot of people that have positions in these no man's lands. And then right here, it kind of picks back up. There's some people that have ownership interests in this area, so they might try to support that price by adding more to their position and kind of calming everybody from selling. Now, if it breaks that, what is it going to happen, right? Another no man's land. And that kind of brings us into this $19, $19 range, the last notable one, until we get to what, 13, and then the next one after that is back into the dollars. I don't think that's that'd be a lot of falling in one day because of not so great of earnings. This is a serious point in the topic, and if they do fall, we do have a little bit of ways to go, because after those 2 recovery days, it's given us some wiggle room. We got 9% to that support. I don't see it falling, but if it did, that's something you have to look out for, because it does kind of look weak, right? I've said it. We're seeing more bullish days, or we're seeing more bearish days than bullish days. Now, I'd like to put emphasis on the point that I'm not saying that I don't like NIO. Today's video is all about the short term, a possible swing trade based on the value right now. And as we can see from NIO's possible earnings that the site is saying that we could see, it's saying this, right? NIO reports after close on Monday, March 1st, Wall Street expects NIO to report a per share loss of 7 cents on revenue of $1.01 billion. This compares to the year ago quarter when it was reported to a per share loss of 39 cents of revenue of 406 million. So yeah, they are doing better than last year this time. But like the article says, there is no evidence that the company will ever perform up to the hype of what investors are putting on it. Not for the short term and not even for the long term. So even though I am bullish on this company for the long term, I am being very careful for what gets announced on Monday. This stock, whether you and your financial advisor decide to invest in it or not, just know that it is still very speculative. But high risk equals high reward. However, guys, that is going to be it for this one. Tell me what you guys think about this new recording. This is not something that I planned, obviously. However, like I said in the beginning, sometimes you got to make do with your situation. Right now, I didn't prepare myself quite enough to get this video done. However, I did want to get that information out to you guys. But other than that, guys, remember to like, comment, and subscribe. And I will see you guys in the next one. Peace.